They're focusing on short-term performance, at least according to the current State of Play report from Newport, no less, now Newport Consulting, showing in essence that companies are less optimistic when it comes to their outlook compared with last year. 43% saying that the government is working against business. John Pope is Director of Newport Consulting, and he's with me in studio along with my guest hostess, Scott Murdoch from The Australian. That last statistic, the 43%, not with government when it comes to singing together as one. You took the snapshot in June, July at the height of the imbroglio between the mining sector and the government. Any real surprise?
No, I don't think it's a surprise, but I think what the message really is this has been an increasing situation over this last year when we've seen the government backtrack on a number of things, whether it be the carbon reduction scheme, mining tax, the uncertainty of that, Fair Work Australia. So companies, that combined with this global uncertainty has made companies focus far more on the short term. So as you say, it's not a surprising statistic, but one that when you add that to the global uncertainty is making companies focus a lot more on the immediate requirements.
And it's organic growth that they're saying is going to be the watchword. It's not really about seizing the day, is it either? I guess that although feeds into the uncertainty. You're not going to make the bets on getting into bed with somebody else, whether you half like them or not.
Absolutely. I mean, if we put this in context and look back a year ago, we had companies saying, where am I going to get my funding from for short-term cash flow? Now that has passed, but whereas a year ago, companies, SMEs and corporates were very buoyant about opportunities for growth. We saw 78% of companies seeing that they were going to grow by more than 10%. That has pulled back, so we're now, so whereas it was 76%, now 58%, so that other 18% are saying, well, it's not going to be over 10%, it's going to be over 5%, and we're going to focus on things that we can control, revenue, costs, profitability, productivity, customer service.
Do you blame, rather perversely, their own shareholders for sending them the signal? It's almost as if the market has told the story, it has underperformed, certainly our Wall Street counterparts. And when you think that a business is but its shareholders, that's the strongest signal of all, is it not?
Well, that's a very interesting one, because obviously CEOs are very much governed by the requirements of their shareholders and to deliver them a consistent dividend and consistent growth. But the question is the consistency. It's that being able to increase their dividends year after year. And what they're saying is, we are not happy to invest and take a longer-term view in this current situation. We are going to defer CapEx. We're not going to look at mergers and acquisitions. We're going to look at what we can control somewhat.
Yeah. And then what, Scott? You know this, of course, night follows day. Productivity goes completely haywire. It just goes nowhere. Right?
Yeah, well, that's exactly right. I think that's always been one of the factors in the economy, Carson, which governments have wanted to put emphasis on, is the fact that productivity growth in Australia is probably not where it should be. And I think that again is going to become one of the key factors during the economic management of the current government.
So what are businesses saying really is going to swing that around? I mean, how are they going to turn the focus back on that? Because it feeds through into how investors are satisfied about a company.
Back onto productivity, on great. Well, I productivity is a huge debate for this country. I think huge issue looming down. You know, what we see is we all accept a rapidly aging population. We're going to see over the next 20 years more and more workers either retiring or working less. I talk with a lot of CEOs every week, and every one of them, without exception, is worried about their aging workforce. You know, whether you look at nurses, average age of 48, truck drivers, 55. So you've got this mammoth issue coming down the road.
The thing is, the bizarre thing is, they are actually wanting to do more talking about it. I would have thought they would have had a guts full of talking, and they would have said, it's time now to do, right? But they're not saying that.
What can be done, though? That's the other factor, too.
Well, you implement, surely, then they said they don't buy the Henry Tax Review, that was a muddle, and that was the uptake on that was just so lukewarm, it wasn't even worth getting into bed with, was it, as a hot water bottle?
I think, Scott, I'd like to pick up on that point because I think there's a lot that can be done. I think CEOs and executives have traditionally looked at technology as a way of improving.
Want those?
Well, I think that's right. I think what they want really is to take a look at, can we use our current resources to produce more? Now, going back to the steeped in of practices of the 80s, it was very much around it had a negativity, cutting, whereas now it's, can we produce more with the same resource? And of course they can do that by looking at their processes better, by looking at
the age-old question of economics, though, is how do you make the resources that you have more efficient?
Absolutely.
Well, that's interesting in the hiring intentions as well, because they're not showing that willingness either to take on, despite us talking about near full employment, you're seeing the trend more back and towards part-time roles now, as they're so still not won over that the environment's right to commit to the future.
That's great. One of the things we talked about last year was the nimbleness and the flexibility of SMEs. And of course they're exercising that now by saying we're not going to be hiring permanents, we're going to hire contract and temporary.
John Pope, Director of Newport Consulting, appreciate those insights. And of course Scott Murdoch, who's been with us all this hour from the Australian. Great to have your input too, Scott. Many thanks.
Thanks, Carson.
Appreciate it.